Hey everyone, thanks for watching. I have a special guest with me today. It's actually part of this business that a lot of you have asked for. You've said, part of my problem is I don't have money, or I don't have enough money to tackle the kind of projects we go after. So I've been going to local real estate meetups, and I've bumped into this great resource twice now. And she was nice enough to join our little show here. Let's welcome Brenda Chen to the show. How you doing today, Brenda?
Great. Thanks so much, Mike. And I've also seen you around a lot, and you speak a lot at local meetups. And yeah, your name is just everywhere. So I'm really glad that we had the chance to do this interview.
Thank you. Yeah, it's fun. Real estate investing, you meet a lot of great people, and if you just like you do, you just go out and help, and just it all circulates. So you're doing a great job, Brenda. So why don't we talk about where you work, right? Why don't we talk about the company you're at, and then we'll go from there. So
Yeah, sure. Yeah, thank you. So I work at Conventus Lending. So we're a private lender, hard money lender based in San Francisco. And so we do bridge loans in around 20 states. And so we lend in places like California, Colorado, Connecticut, New York, Hawaii. So 20 states all over the U.S. And since we started, we've funded over $1.5 billion in loans. So we fund the acquisition of single-family, multifamily real estate, and we're just a good bridge option for people to get their property stabilized and then either sell or refinance. So it's a lot faster than conventional banks. So I've been there for 2 years now, and I really love it there. And I love all the cool people that I get to meet because of my job, like you, Mike. And yeah, so it's been really enjoyable.
Yeah, you get to go out and really meet people that are doing projects and get out there in the field, right?
Yeah, it's really awesome. We're really encouraged to do that because I think real estate is one of those industries where things happen in person. It's not really online. So we love meeting our clients face to face and seeing what they're up to. And then I personally really like connecting people. So connecting my clients so they can work together. And then also just being a part of a community. I think that's really important. So showing up to these events and thinking of it as more like building a relationship than being transactional, because we can all help each other in different ways.
Oh, absolutely. And again, when I saw you at the meetups, both times you stood up, this is where we work. People were given references of you and Conventus, sorry. So clearly doing some great stuff. And 1.5 billion in lending that's a lot of zeros.
Yeah, exactly. Yeah. I'm totally new to this space, and it's just so amazing. Like what our founders are doing with this. Like I had no idea how financing works before this, and I think they really ignited this curiosity within me. Like this is how the world works. Like this is how everything works. This financing and so it's really interesting to see like where money comes from and like how to use it and how to like how all these investments work. I think it's been really awesome, and I think a lot of people they're just so creative with it. So it's a whole new world for me.
That's awesome. Well, let's baby steps. Let's not assume everybody knows what hard money is. So let's define. So what is hard money in your opinion?
Yeah, and I had no idea before either. So basically, so it's called hard money because it's based on the hard asset, so something physical. So it's a special type of loan where the lender will look at the property itself, sometimes more so than the profile of the borrower. But in our case, we look at both. But the property value itself is what we look at, what we focus on. And so that's how we're able to do things a lot faster, because it doesn't take that much time to evaluate property than going through someone's tax returns, bank statement, experience, and a lot of that takes more time. So it's just a faster way to get financing. So the interest rates are higher than conventional loans, but it's a premium that people pay to get their deals done faster. And then some people are able to get these loans if they're self-employed, or if it just takes longer to get bank loans, they would go this route. Yeah.
Yeah, so there's lots of things about hard money, and I've used hard money over the years. So for me, yes, hard money is more expensive, but when you're going after hard money, it's short term, right? It's 6, 12, maybe 18 months, right? Because you have to do something, a value add likely to the asset, at least most of the time. So having somebody that comes in and just looks at the hard asset and says, okay, it's worth X, and we'll lend, either usually a portion of X, but it could be pretty high, right? It could be 80% sometimes, depending on the situation. But so that's first off. Interest rates higher, typically short term, because you have an exit with a sale or a refi if you're planning to keep it, right? That's typically what happens for you. These people aren't keeping hard money loans for 10 years, are they?
No, it's mostly a short-term option. So people tend to just want to sell the property quickly or refinance quickly, or if they're waiting on a sale and another property paid off, or another form of payment or something, they would use this. And we are starting to offer longer-term loans for rentals. So that's the direction we're going towards, because we've had a lot of requests for that.
Yeah.
And so eventually we're going to get there, but mostly our loans are 5 years and under.
Okay. Yeah, and that's one of the reasons you could do $1.5 billion is because you're cycling piles of dollars a couple of times a year, right? So makes total sense. So okay, so this is a question I knew I wanted to ask you. So lots of people say they want money, they think they have a project. How take it somebody you haven't met, they call you or they meet you at a meetup. How should they present their deal to you or to your company, right? Is there a preferred way, or do they just come up and give you a big bear hug and say, give me $1 million? Or, what happens?
Yeah, that's a great question. And I think, it's good to be organized. And for lenders like us, we look at two things. So we look at the property, and then we look at the sponsor, so the borrower. So for the property, we just want to see that the as-is value is there. So if it's single family 1 to 4 units, usually we look at comps in the area. So recently sold properties with similar square footage. And then we also look for multifamily, so we look at the net operating income, and then all their their operating history, expenses. So more from an income approach for multifamily. So for the property, we just want to see that their plan makes sense. So if they're flipping it, we look at their budget. If they're renting it out, we want to see that the comps that they want to achieve is reasonable. And then multifamily, we also look at cap rates, and we have a whole team devoted to that, a credit team that analyzes the property, so they underwrite the deal. So just want to verify what the client's estimates are in terms of as-is value, what they're doing to the property, and then the after repair value or the resale value. And then for the clients themselves, we want to see good credit score usually. Good income would be good to present past deals, and it's good when people can show like websites or pictures or their analysis of like how much return they were able to get on their deals. It's not required for sure, but the more detailed the better. And just like if you're presenting to like a friend, like, and you want them to invest with you, the more well-researched you seem, the more comfortable that the lenders will get with you. And then also asking for, because I think for different lenders, they value different things. So for us, we like to make good loans. So we're able to give like better pricing for either lower LTV or someone who's really, really experienced. So we really value that. So if you can present what's important to the lender, you're able to get the best rate. So just finding out from the lender what's important to them, and then yeah, presenting yourself in that light.
Yeah, that's awesome. Yeah, and again, what I'm hearing you say, and it should be intuitive, people coming to you, but it may not be, is you want to do a good loan, like you just said, right? Your goal is to get paid back. It's not to foreclose and take the asset, right? That's a loss in your book if you have to take the asset back. So yeah, you're, you know, what I hear in this is sometimes you say no, right? Because their ARV is too low or too high or out of whack, or they've never done it before and they do a full ground up and they've never done one before. Or, I mean, there's lots of reasons where you say no that probably protects the person asking for the money, right? It gets them out of a bad deal. I would assume. I would assume you say no plenty of times that people come to you, I would guess.
Yeah, and so for us, this is our business, so of course we want to lend our money, but at the same time, like you said, we would prefer that people are able to exit successfully and make a lot of money and then come back and become repeat clients.
Yep.
So I think, our credit team is really strong in that they're able to do these analysis. And we've had people where we analyzed their budget and we had to talk to their contractors and it didn't make sense, and it turned out that it was a project that they shouldn't have gone into. And so I think it really helps, especially with new people when they don't know what even to look for. I think it's been really eye-opening for me to see this from the credit perspective as well, because when I first started, the market was really doing really well, and I thought like, oh yeah, like these clients, they're totally going to get the returns that they are expecting. But having been in this business for 2 years, I realized that, wow, the hard questions that we asked were really important. Sometimes in the beginning, I sided a lot with the clients, like, oh yeah, like I really want them to proceed with the project, but our credit team had these questions that they had to ask, and I'm glad that they did, because they were able to shine light on the project, like so that the clients can be covered if things don't go exactly the way they want. So we really don't want them to lose money. So
yeah, and again, you do not want the asset back, right? You're not one of those predatory lenders that is trying to over leverage someone so that you can go get assets at 80 cents on the dollar or whatever. Right. You want to do good business and repeat business and build big client bases and be successful long-term as your business of lending. So that's really, really cool to see. So why don't we, the other thing I wanted to talk about, you talked about, is showing a track record. And I think that's so important, right? You need to document what you're seeing out there. Even if you quote unquote haven't done a deal yet, you need to show that you've looked at and evaluated deals. So people, you don't just walk down the street and say, hey, I'm going to buy the yellow house, right? That's not how this works. You got to, build a track record and experience. So you're seen as the operator, right? The second part of your equation, that you're somebody to be trusted and you have a good chance of success. Is that fair?
Mm-hmm.
That's
yeah,
great.
exactly. And I think, I've seen some clients that are able to get their projects funded because they had such a well-organized package that they were able to present. So they had things like the demographics, the trends in the area, the comps, projected comps. It was really beautifully packaged as well. So that's also another thing. And yeah, I think if you're not getting the answer that you would like, to just ask to get on a call with the lender to explain, because sometimes if you send something over on paper or over email or something, that your passion or your expertise might not come off as well as it would if you were to just get on a call. And we've lent to people that might not have had the experience, but they were able to show us how they're able to get there. So to get their plans executed, I mean. So I think it really helps. And I think that's how you're able to move the needle, is if you're able to get on a call with your lender to explain how you plan to execute.
Yeah, that's awesome. So, okay, let's give people a flavor of some deals that you put together recently. because you do work in the Silicon Valley, which, you know, these big dollar numbers, right? So what are some examples of some loans you've done recently or been a part of?
Yeah, so we fund a lot of fix and flips,
Mm-hmm.
both cosmetic flips and structural flips where they're adding square footage or adding an ADU. We see that a lot.
Mm-hmm.
We fund multifamilies all over the U.S. and yeah, we fund a lot of multifamily flips as well, and sometimes people want to keep them long term as rentals.
Yeah.
We did a big Georgia bridge loan where they were just waiting on a seller to buy their property, and they're they're all these they're getting pressure from their other lenders to do the work, but they didn't want to, so they wanted to just sell the property, so they wanted to just refinance quickly with us, so they could just not have to go through with the work with the other lender. So like very specific random scenarios like that.
Yeah.
But yeah, generally we do like purchase plus rehab or refinance plus rehab all over the US.
Okay. So again, you may do a San Francisco, because you're in San Francisco, right? You might do a San Francisco flip and loan $1.5 million for 9 months and be out of that deal when the person sells it. And you may do a multifamily in Denver, right? When you say multifamily, are we talking up to fourplexes, or are we talking like 10, 20, 50, 100 units?
Yeah, so we count single family as anything 1 to 4, and then multifamily 5 and up. Yeah.
Got it. All right. So the whole residential commercial divide.
Yeah.
Okay.
We've also funded like mixed use properties, some commercial stuff. And one story that I like to talk about is this property in New Jersey. It was this older woman that fell behind on her payments because she had some family issues, and she had so much equity in the property. The thing was that it was really badly managed, so she wasn't able to make payments on her mortgage. So her friend actually found us, and then we were able to do a loan on the property to help her. We had like escrowed interest and all that for her to make her payments because she had so much equity. So her friend, with our loan, helped her bring the property back to code and then get all the new tenants in. And then she paid off her loan and she got to keep her property. So I think
that's awesome.
Yeah. So it's I really like those stories because sometimes people don't know that there's this bridge lending option out there. They think that they only have to go through a bank, but she couldn't get a bank loan because she was behind, but she still had so much equity. So it was a good opportunity for her to take back her control of the property, and so she didn't have to just lose it because of mismanagement.
Yeah, that makes total sense. So okay, so we talked about what is hard money. We talked about how to bring it. You know, how a new investor should present themselves. A couple of war stories. I love that story about helping that lady out. That's pretty awesome. What do you have, like different options, like, you know, 1 year, 5 year, 90% LTV, 60%? I mean, what are the options? Do you have like a standard menu, or is it always crazy?
It's very customized. So I think that's what makes us unique, is that we try to understand what their business plan is, and then we work our loan around that, versus sometimes people have to stick to a certain type of loan. But we can do things like escrowing interest. We can fund higher rehab upfront. Of course, these things always change, but we're able to be as flexible as we can because we really like to delight our customers, and I think it really makes us happy to see them succeed. So we can fund. I'm hesitant to say the things that we do because they always change, but we have a lot of flexibility with like inspections or like depending on other factors. So if there's a certain thing that you want, as long as there are mitigating factors, we can find a way to make it work. So
Yeah.
things like inspections.
Let me give you a for example. Let's say I've done a couple of deals with you, so we'll get around the whole I'm a new person, so we'll take that off the table. Say I've done 3 or 4 deals with you already, and I come to you with a deal, and I say, hey, I don't want to make any monthly payments. I want to escrow payments for 6 months, right, or whatever you want to call it, right? Take it out of there.
Mm-hmm.
That's possible, is what I'm hearing you say.
Yeah, it's possible. Yeah.
Right. And then would you say I could get cheaper rates if my LTV was 60% versus 90%?
Yeah, that's correct. Yeah.
Yeah. So, I mean, again, this is what's great about Conventus is you don't have a menu, right? You do have variables that you can choose and maneuver, but you really listen to the client, what they want and need and what makes that project go, because people run their businesses differently.
Mm-hmm.
And they have different needs. Sometimes they might need 80% LTV. Sometimes they might need 60. Sometimes they need repair money. Sometimes they don't. So, having those conversations is a great idea, and it's why you're so successful. So, nice job. A great company.
Yeah. Yeah. And there are little things we can do. Like if you wanted an even lower rate, you can, and you're going to hold the loan for a while, you can say that, okay, I'm okay with the minimum interest period if you bring my rate down by this much. So, yeah, there are just things like that, or cross-collateralizing other properties that you have. So we funded loans where all of the down payment was coming from a cash out of another property.
Mm-hmm.
And then as long as they're in the same state, we can do it in one loan. And if the equity on that property was high enough, you can bring the total loan to value down on your entire loan, which gives you a lower rate.
Yeah, it makes total sense.
Yeah. Mm-hmm.
It's pretty awesome. So where can somebody find out about Conventus and then find out about Brenda Chen? Where would they go? Where should they go?
Yeah, so Conventus, we're at cvlending.com. So C as in Charlie, V as in Victor, lending.com. And then, I have a personal website. It's brendatchen.com. So I also host local meetups in San Francisco, and then I partner with people in Oakland and South Bay, like San Jose, to host other events. So we have like happy hours and dinners and socials, and we also have speaker events. And yeah, we would love to have you, Mike, for one of our speaker events.
I look forward to it. Okay. Mm-hmm. So cvlending.com and then brendatchen.com. Is that right?
Yeah.
Okay.
BrendaTchen.com.
Very cool. Very cool. Is there a Facebook group or anything else here that you run or are part of that people should look up?
Yeah, so the Meetup Group is just meetup.com/SFBAYRE, so SFBAYRE. That's where we post all our events. And we do have a Facebook group, but it's not as active as the Meetup Group, so I would just say,
okay.
Yeah.
So SFBAYRE, so real estate, right?
Yeah.
Okay. I will go add another meetup to my... Very cool. All right, Brenda, any last things you want to talk about hard money, something you want to remind people of, or any last parting thoughts?
Yeah, I would just say, what I've learned through doing this is that anything is possible. You just need to ask. So just ask a lot of questions. Like if you need a certain thing to work for you, there's a way to do it if you just find out enough from any lender that you have. And then, there are people that want to help you. So I would just say, keep doing what you guys are doing and learning, and the possibilities are endless. And it's really like seeing your story, Mike, like I feel really inspired by all of you that your real estate dreams can come true. So yeah, good luck to everybody.
Excellent. Thank you. That's very well said, Brenda. Thank you very much for doing this. Hard money is a very important topic, and you've been great. Thank you very much.
Thank you, Mike.